Hey guys, welcome back. I'm Jeb Smith, and in today's video, we're going to discuss the housing market 2020 for July. Now, while I realize we're not in July yet, we're at the tail end of June, but there's a lot of data that's come out last week with regards to forbearances and this week with regards to buyer demand and new home sales that are going to impact our housing market in the month of July. So I want to take today's video and discuss that information. I also want to provide some data, not only on Southern California home sales and demand and the market, but all of California. What is the housing market doing? That's what we're going to discuss today. We're actually going to bring up some charts, show you the numbers, because a lot of you guys have requested the numbers along with my thoughts on the market. So we're going to bring up those as well. But before we get into it, I want to take a minute and introduce myself again. I'm Jeb Smith. I'm a real estate broker here in Southern California. My channel is all about real estate. So if you're new to me, new to my channel, do me a favor. If you like all things real estate, hit that subscribe button. And if you feel so inclined, hit that like button as we're going through it if you feel the information is useful, as it helps me get it out there to more people. So in this article that I'm going to bring up from Housing Wire, they say that 79,000 more people filed for mortgage forbearance this past week versus the previous week. Now, I don't think any of us are surprised with this, as the numbers have trickled down over the last couple of weeks. But if you've been paying attention at all, there are still businesses that are suffering. There's still people, businesses laying people off, and that will likely continue for the foreseeable future. You're going to have these mixes of people going back to work, off unemployment, and then people coming, out of work on unemployment and vice versa.
Okay, as you'll see here, as I mentioned a moment ago, 79,000 people from the prior week. Now, this article, as I mentioned, is from Housing Wire. I'll put the link below in case you're interested in reading the entire article. But that represents 8.8% of all active mortgages, and that's up from 8.7% from the previous week. Now, that's not a huge jump, but the fact is mortgage forbearances are going up. Now, that does represent, $405 billion in unpaid principal. It goes on to say that, FHA loans went from 14.3% to 14.7%, or VA loans went from 7.3% to 7.5%. So homeowners who have little to no down payment when they purchase their properties are a large percentage of the people that are actually filing for forbearance. And together, that represents $258 billion of unpaid principal. The total was $405 billion, so 258 of that is FHA and VA. So, more than half is FHA and VA.
Now, we don't know what the future holds, but what we do know is that a lot of the lenders out there that are providing mortgage forbearance, if it's federally backed, are doing what they can to help homeowners. And we've discussed this in previous videos. You have the option through the CARES Act to file for mortgage forbearance up to 1 year. So depending on when you are affected by COVID, whether it was back in March and you started the process, or hypothetically you are affected with being furloughed or a loss of employment in, say, October or November, right? We're just getting into July. Say it's 3 months from now. You still have the option for filing mortgage forbearance up to 1 year. And there's a chance that could be extended at some point in the future, as there are other talks about other stimulus bills coming out where they may not only address unemployment, that additional bonus, but they also will likely address mortgage forbearance and non-federally backed loans as well in that. But right now we don't have that information. But what we do know, like I mentioned, is that lenders are helping homeowners, by allowing those missed payments to either be added onto the back of the loan through a deferral option, come up with some sort of repayment plan, or a loan modification where homeowners don't have to pay that lump sum at one time. This will allow people to get back on their feet. Now, is it going to fix the problem? It's not necessarily going to fix the problem, but what it does allow is it does allow a lot of people to regain footing, to get back on their feet, give them time to look for a job, to figure out how they're going to make their payment. And assuming they can continue making their payment, then they'll have that deferral option. If not, they'll have to reconsider one of those payment plans or, a loan modification at that time. Now, I'm one of those people that believe a lot of the people that are currently taking mortgage forbearance don't necessarily need it. There was a report out some months ago that 20% of the people who actually took mortgage forbearance don't need it. And if you're watching any of the other YouTubers out there, there's one guy right now that has a huge following. I'm not going to mention his name, but he's telling people to take mortgage forbearance. Take that year that they're granting you because it's not going to affect your credit. You're able to throw those payments onto the back of your loan, assuming you're able to make your monthly mortgage payment at the time that you resume or reinstate your forbearance, and then actually save those payments. Put them in a emergency fund. Do something where you're saving that money, because the government is essentially allowing this to take place. Now, I'll be the first to tell you, I'm not one of those people that believe that you should do that. I think it should be a last resort option, because we don't know that every single person that files for this is going to be granted the deferral option. That's what they say should happen if you're able to make those payments, but we don't know that that's going to happen because that deferral option isn't even an option yet. It doesn't come out until July 1st. So I don't want to, tell you to go do that and then something changes, but know that, mortgage forbearances are up. You're going to have this wave, in my opinion, of people filing going down and then likely going back up again, depending on what happens in the economy, with states coming in and out of, restrictions with regards to stay-at-home orders and bars being closed and so on and so forth, and restaurants being closed. As those people, as restaurants close, those people are going to go back on unemployment, right? And then, the numbers on unemployment are going to go up, and then they're going to go back to work and numbers may go down. So you're going to have this influx and change quite continuously throughout the end of the year, and likely into next year, depending on what happens. We also got news today that pending home sales are up 44% in May. This is a huge surge, actually the biggest month-over-month gain ever in the history of recording these numbers. What does that tell us? It shows that buyers are out there looking to buy property. Now, a lot of it has to do with likely super low interest rates being below 3% for a lot of the home buyers out there, especially if you're getting conventional financing. And we've talked about that in other videos. But, to get back at it, buyer demand is definitely on the rise. Let's take a look at this article right now from Housing Wire.
U.S. pending home sales surged a record 44% in May, the biggest gain on record as Americans emerging from lockdowns went shopping. Lawrence Yun, NAR's chief economist, National Association of Realtors chief economist, says this bounce back also speaks to how the housing sector could lead the way for a broader economic recovery. Now, he does go on to give his forecast for the housing market down here, where he says that he expects existing home sales in 2020 to drop by 7.7%, but new home sales to rise 1%. And, while he does expect a drop in the existing home sales, they were initially predicting over a 10% drop. So now the drop is less than they had initially predicted based on the current, activity in the market. After missing, the spring buying season, if you will. It goes on to talk about interest rates, being in the low 3% and likely being in the low 3% as we move into 2021.
Now, I'm one that believes that pending home sales are likely going to continue to be on the rise. Now, I don't know that we're going to go up 44% or even month over month. We're going to go up from the 44% level. We'll likely continue to have strong pending sales month over month, just because of where inventory levels are and where interest rates are, right? You've got this pent-up demand imbalance, if you will, between buyers and sellers. You've got a lot of people that are looking to purchase, not a lot of property out there, and super low interest rates for those buyers. And therefore, when a good property comes on the market, these people are putting in offers a lot of times in multiple offer situations. At least that's what I'm experiencing here in Southern California. And we're going to talk about those numbers in just a moment. But the activity is there. So if you're a buyer looking to purchase a property, make sure you're pre-approved. Make sure you already have gone through that process prior to looking at a home or looking for homes, because chances are, if it's something that is priced right in a good market, it's going to go quickly and you're going to need to be in a position to make an offer quickly. And if you're a seller that's been contemplating the market, it's a really good time because you don't have a lot of competition. It's rare that it's a good time to be both a buyer and a seller. I'll be completely honest, it is a seller's market, right? So it's gonna be more advantageous for the sellers that are looking to sell their properties than it is for a buyer. But it's good for a buyer because there's low interest rates, right? And chances are we're not going to see rates this low again. While rates may head lower over the next couple of weeks to months, what I'm talking is years out, right? You're not going to see rates this low again, in my opinion. With regards to sellers, it's a good time because there's low inventory. You have very little competition out there. If your home is priced right and you're in that, I would say under $1 million, under 1.2 price point, chances are you got a really good opportunity to sell your property in a very short period of time. And chances are it could have multiple offers, assuming it's priced correctly and your agent does the proper marketing to get you there. And last thing, before we get into the actual data for Southern California or California in general, let's talk about new home sales. New home sales for May were up nearly 17% when the expectation was being up 2%. So again, you're seeing a lot of demand in the market. A lot of buyers are looking for the right home, likely because of interest rates, likely because of low inventory. I don't expect that to change for the foreseeable future. As we continue to see the market, I will continue to update you, but I think 2020 is going to continue on this pace, likely into 2021. You're going to see a market very similar to 2020 with regards to real estate and how things are proceeding. We don't know what's going to happen there, but I will continue to update you as we do. But let's take a minute and talk about Southern California. Now, with regards to Southern California, the data that I'm going to provide you is coming from an article that came out in the Orange County Register as of today. Their information, their data is coming from Zillow. As I've mentioned in previous videos, I don't give Zillow a lot of credit when it comes to telling me what your home is worth or that sort of thing with regards to the Zestimate. But when they're giving us factual information, the data, because they're essentially, their own MLS, if you will, with regards to information out there, they have a lot of information on pending home sales, on, property going into escrow, new inventory. And so this information is accurate, and I want to take a minute and discuss it with you. All right, so let's take a minute and look at that article directly from the Orange County Register, read the data.
Coronavirus rebounds, SoCal pending home sales back above 2019 pace. So if you see this graph, basically it shows new escrows opened versus a year ago. We started in January. Escrows were above that threshold, if you will. And then as we got into March, they dropped below. And it got really bad towards the middle of April and then started to come out. So like the week of April 18th was a low. And then since then, new escrows opened have continued to rise up. So now we're back positive again based on the beginning of the year. Now, the article says that, Southern California house hunters put more homes into escrow for the 9th consecutive week, pushing the buying pace above the year ago for the first time in 14 weeks. Now, this information came from Zillow. I'm not going to read it line for line. Again, I'll put the link in the description below if you want to read the article. But what I will read are the important points about the different counties in Southern California as well as California as a whole. Now, it does mention that Southern California owners are still not in a heated selling mood. Not a lot of property out there. They listed 4,564 homes for sale in the week. That's up 2.3% from the previous week, but down 22% year over year. So we're down 22% in inventory from where we were last year. That put total inventory at 28,694, and that's down versus the previous week and down 27% in a year. Now, it goes on here to show a graph that came from Zillow with the count of existing homes put into escrow. Now, this goes back to a year ago, July. You can see that, the number of homes in escrow at that point were, 1,500 or so, because there's not lines here. It's hard to see, but we got up at the height of the mid 3,000s here in 2019 and back down as the holidays came. Escrows went down, existing home sales went down, and then at the beginning of the year started to rise, which is what we expected, dropped again with the pandemic, and since then we've been on the rise, almost back to where we were prior to the start of this. Now, this data is for LA and Orange County. It shows that new escrows opened, 2,058 contracts signed. That's up 4.2% in a week and 35% in a month. That goes back with that 44% rise in pending home sales that we talked about earlier. Now, new listings, 2,821. That's down 22% in a year. Total inventory, 17,363. That's the number of homes on the market. That's down 25% over the last 12 months. So inventory is very, very low, which is what we talked about. Now, the median list price, $901,600. That's up 7.3% in a year. Not down, up. Median home price. It goes on to talk about the Inland Empire. Inland Empire, escrows, down 3.3% in a week. They're up 16% over the last 12 months. Inventory is down 21% in a year. Total inventory is down 29% over the last 29% over the last 12 months. And the median list price is up 3.8% in a year, and that price is $439,778. And then it's now statewide trend. So this is statewide. It shows a faster rebound, 8,127 escrows. That's up 0.2% in a week, 21% in a month, 23% over 12 months. New listings still down 19% in a year. Total inventory down 36% in the last 12 months. But median list price up 12%, 12.7% in a year. So it shows that home prices are still going up. The list prices are still going up, which in theory, if homes are selling quickly, they're probably selling close to the list price. National stats for the U.S. market, 87,000 new escrows. That's up 2.1% in a week. That's 21% up over 12 months. New listings down 21% in a year. Total inventory down 19% over the last 12 months. Median house price is up 3.2% to $335,160.
As you can see from that data, you can see that buyer demand is up, listings are down, but home values are essentially going up, not only in Southern California, but across the state. And I've had a lot of people reach out to me in different areas of the state telling me that, home prices are down 5% or down 10% and that values are going down. There's absolutely nothing to support that. In fact, I've talked to agents. I network with a lot of agents across the state of California, and a lot of these are top producing agents in a lot of the cities that have been mentioned, and they're experiencing exactly what I'm experiencing here in Southern California, and that's a strong real estate market. One, where homes go on the market and they're priced correctly, they sell. They sell with multiple offers in a lot of cases. And the demand is there, right? And we see that continuing. They see that continuing there. I see that continuing here. So while there's a lot of people out there that want to see a market crash, they want to see housing go down so that they can get their foot in the door, I don't see that happening, at least not in this year, likely not into next year. But as always, I'll continue to update you as more information comes out. I'll continue to provide you with data, with advice on someone who's actually in the market. I'm in the market every day helping buyers and sellers. So this is firsthand advice. I'm not someone sitting on the sidelines, an economist just telling you this is what the market should be doing. I'm telling you what the market is doing because I'm out there in it. So with that said, do me a favor. If you have questions, comments, leave them below. I always do my best to address them. I like having good conversation. If you think I'm completely wrong, tell me why, but provide me with information on why. And if you think I'm right, great, let me know. The support is always welcome as well. But anyway, I love having good conversation. I appreciate you. I appreciate the opportunity to help guide you in that process. And if there's other information, other videos you want me to do on, you can leave those comments as well below. But either way, I appreciate you taking the time. I appreciate your support. We'll see you again soon. Have an awesome day. Bye-bye.